What are the new tax rules on dividends? Does it affect you? And what do you need to do? Hi, my name is Mitch Hahn. Welcome to Nordens TV, where we have the pleasure of speaking to one of my fellow partners, Joe Sword, an award-winning chartered accountant here at Nordens, who is going to tell us all about it. So Joe, thank you for coming in and doing the video with me. The dividend rules have changed. So what exactly has changed?
Well, so the government announced in the recent summer budget that they're making changes to the way that dividends are taxed. In simple terms, they've scrapped the basic rate band for dividend tax credits and replaced it with a dividend allowance of £5,000. So what this means is UK residents will pay tax on any dividends they receive over the allowance of £5,000. And they'll be taxed at the following rates: 7.5% on dividend income within the basic rate band of about 40,000, 32.5% on any dividend income above that amount, and 38.1% on dividend income within the additional rate band. Dividends received in ISAs continue to be tax-free.
So why have they done this?
So the government have defined this and the purpose of it to address the incentive for some people to set up a company and make payments as dividends rather than wages to simply reduce their tax bill. And what this will do in the government's eyes is enable their plan to reduce the rate of corporation tax to 18% by 2020, so effectively paying for that reduction. And in their view, that will modernise, reform and simplify dividend taxation, creating a fairer system.
And when does this take effect? And also, who is affected by it as well?
So it's already taken effect. It took effect, started from the 6th of April 2016 to the start of this month. And the people affected are anyone that receives a dividend of more than 5,000.
So does this mean then that a limited company is no longer efficient, or maybe I should consider de-incorporating?
Well, that's quite a common question. Quite a lot of our clients have asked that already, but the answer is not at all. A limited company is still a more efficient setup than a self-employed setup, and that's assuming your profit will be above 14,000. So you need to gauge your profit level, and you can play around with different profit levels by downloading our free app, the Nordens app, and using the Should I Incorporate tool located in the calculator section, and that will give you a gauge and some ideas of what would be more efficient for you and how much.
So if I or anybody who's watching this video are trading as a sole trader, should they or I consider incorporating to a limited company?
Yeah, definitely. What I'd recommend is definitely get in touch with someone here at Nordens, and we'll be able to look into your unique case and advise accordingly. Like I just mentioned, if your profit's above 14,000, it's definitely something to consider.
So if I'm set up with a low salary and high dividend structure, should I not just increase my salary? Would that not make sense?
Well, you could, there's nothing stopping you, but it's definitely not as efficient as setting up through low salary and dividends, even with these changes. And this is due to the additional national insurance that you'd have to pay on a higher salary.
Okay. So are there any other ways that I could mitigate the additional tax that this would cause?
Well, the thing is, everyone's situation is different, so it's tough to give a blanket answer. But what I'd recommend, if you're an existing client, contact your client manager here at Nordens, and they'll be able to speak to you to give you an accurate answer based on your unique circumstances. If you're not a client, then please contact our office, and we can arrange a free consultation for you to come and sit down with one of us, and we can, again, go through your unique circumstances and come up with some options for you.
That's fantastic. Thanks, Joe.
Thanks a lot.
So as you can see, there's clearly been some important changes. I do highly recommend that you speak to us to get some advice on the matter. Give us a call, drop us a mail, and we will be more than happy to walk you through the various options to help your business needs. Our details are coming up on the screen.